What's up, everybody? It's your boy Sage Jones, the Smart Investor, and I wanted to show you exactly how I'm entering trades on the higher time frame, just using the hour and the daily time frame, and passing prop firms challenges this way, and entering the market stress free, not worrying about the losing a trade, able to go to sleep and wake up and profit, or wake up and break even. So let's go ahead and get started. All right, guys. So this is going to be really raw, like all my YouTube videos are. I'm not one of those people that's into theatrics and doing all this extra in and out or whatever. I'm straight to the point. So, um, like I said, this strategy will work for synthetic indices, crypto, forex, or futures. So I'm gonna show you what I'm speaking on. So right now we have a synthetic indice account open right here. As you can see, I'm floating $6.46 cent in profit. I did a withdrawal the other day of $354, I believe. Let's look here. Yeah, 300. If you see uh, right here, I did a withdrawal of 357. Um, so, and this was yesterday on, well, yeah, yesterday night. So on the 16th. Today it's 12 a.m., so it's the 18th. So yeah, I did this withdrawal on the 16th and got it the same day out also. So um and what we'll do here is I'll show you what I'm doing, right? And then we'll go through looking at Forex, and then we'll look at um futures from here too. So what I'm doing here is I have a 200 moving average, and that 200 moving average will show you here is smooth. And then I have the support and resistance indicator as always, and I have the trend point arrows here. So what I'm doing here is I isolate the only two time frames, in which the two time frames that I isolate are the hour and the daily time frame. And I isolate those only by removing all the extra time frames from here. So that way I only focus on these two time frames. Um, so what I do is I hop up to right now we're in a trade on volatility 75. So I hop up to the daily time frame on volatility 75. As you can see that the daily time frame has been in a downtrend for a long time, right? So these candles, each one of these candles is a day. Each one of these candles is a day, right? So look how many days this has been in the downtrend since off of this resistance. So the resistance hit, the trend point arrow hit the market. It broke through the 200 moving average. It really doesn't matter if it has broken through the 200 moving average on the daily time frame. That's not really the important part. But if the candles are below the 200 moving average, then you best believe that this is going to keep pushing in this direction for a long period of time until it breaks back above the 200 moving average. So, um, but I digress. So we have confirmation that the market is in a downtrend on the daily time frame based off of the resistance here and the trend point arrows and the 200 moving average. So we'll jump back to the hour. And what I do is I'm waiting for I clarify the direction, right? So the direction on the overall hour time frame is down, right? Because the candles are below the 200 moving average, and the 200 moving average is at an angle. So as you can see, the 200 moving average is moving downward. It's moving downward, right? So it's in this area where it's moving downward, where the market is just moving downward. So you're always going to follow the slope of the line. So this is the trend direction. So what I do is I wait until I get a resistance, right? So I get a resistance here, and then I wait once the resistance hits on the 200 on the hour time frame. I wait until I get a trend point arrow, and I enter. Now the trend point arrow is on the hour time frame. That means each one of these candles is an hour long. So you could get a trend point arrow here and trade for 2 hours. 2 hours. This is a 2 hour. This is a 2 hour. One candle, 2 hours. 2 hours. 2 hours, you're making money. Or you can hold it in this direction until you get a adverse entry here, or keep holding until you hit previous support. So what I typically do is I hold until I hit previous support, but I only enter when I get a trend point arrow. So what happens is that the support hits, and I'm like, okay, the support hit. Then I wait until I get one of these arrows, one of these. I wait until I get a sell arrow here, right? This is the trend point arrow. It hit. Once it hits, I know the market is moving down. It's confirmation that the market is moving down. As you can see, this market has moved down today, this day, and is still breaking through and moving down this day. So it moved, there's 3 days of the market going downward. So it's just 3 days of this market moving downward. So you could have gotten a trade here, got out here in the same day, entered a trade here, got a trend point arrow here and got out, then got a sell arrow here. Because remember, we're only taking entries when we get the sell arrow here. We get the sell arrow in the direction of the trend. So the sell arrow must come in the direction of the trend. So once we got a adverse signal here, this is where we would have got out. And then as soon as we got a new trend point arrow telling us that the market was moving down, this is when we enter. And you do not have to hold until you get down to this area. Like, this is a good take profit area, like the previous support. But you could hold until, you either hit the amount of profit that you want to hit, or take maybe stay in the market 3 or 4 hours and get out, right? Now, this happens consistently. Like, if I show you here that this is a live account, right? So like I said, I put in this account, I put I think $21 in. Yeah, so I put 21.25 in right here, as you can see. I put 21.25 in on the, what is it, April 27th. This is where I put 21.25 in, right? And then what I did is I started trading with this strategy, taking small wins, building the account up, and then I took a loss of $42. Then yeah, that's my fault. I actually started this account. What did I start this account with? Let's go back. They don't separate the amount of money. I know it was around $20. Hold on, guys. I apologize. I want to be very accurate with what I'm saying. I don't want it to seem like I'm capping here. Scrolling up. Okay, yeah, it was 2020. It was 2020. So I put $20. So yeah, and that was on the 11th. My fault. So I put in on the 11th, as you can see right here, on the 11th of May, I put in $20.20. And that $20.20, this is I started entering trades in the market here, right? So I took small trades and built the account up. Then I made $35 here. I made $4 and some change, and I just kept building it. Then I took two losses, and I kept building it up. 20 loss, took a loss here, took a loss here, got those losses back, took a loss here. So you can see there's way more blue than red. And then I took a large win off of the dollars and 20 cents that I put in of $118. That $118 happened on the 14th of May. And I remember I started this account with $20.20. You can start the account with $10, but you have to have proper trading risk. So it's not like I was over leveraging the account. I was doing small lot sizes and started building up once I started building capital. Like as you can tell, I made $93 on a trade. I made $118 on a trade. Like once I started getting into the higher amounts of money, then that's when I started up in the lot sizes. But you can tell I I did a lot of positive trading here. I did a withdrawal on the 16th of $357. So it took me literally 6 days to build my account up to $557. So I took 357 out of the account and left 200 in. So I left the 200, the active 200 that's in the account right now. I left that in there. So I made $500 off of $20.20 in 6 days. Um, which is, not everybody's gonna be able to do that. Like I'm a seasoned trader. So as you can see right here, my biggest the profit that I had overall, was my profit was is 536 here. As you can tell, this is after the swipe charges and things like that. And then here was the total profit. It was 552 552.65. And then I did that withdrawal. So what I'm looking for right now is I'm looking for entries on volatility 25. Let me clear this out. I'm looking for entries on volatility 25. So right now, um, I jump to the daily time frame on volatility 25. As you can see, the daily time frame is bearish. As you can tell here, we have a resistance, and the market is pushing downward. So, that's on the daily. So I jump back to the hourly. The hourly is below the 200 moving average, and we're moving with the slope of the line, following the trend. We're waiting now for a resistance to hit. Right now, the resistance hasn't hit yet. So so this could keep pushing back. I feel like the market is going to keep pushing back, probably closer to the 200 moving average here. So it should be like in this area here, when like around this area is when the resistance should hit. And then once the resistance hit, I'm going to enter and hold until I hit previous support. So that's what I'm doing right now. As you can tell, this works on synthetic indices. As you can tell, this is a live account. This is a live account. You look up here, it's a live account. I showed you the withdrawal. This is a live account. So I'm gonna go jump over to my funding pips account. I'm gonna show you what I'm doing there. So give me 1 second. All right, guys. So this is my Funding Pips back office here. You can tell here, this was the first phase of the challenge. It says pass, and then this one's in review. So you know this is live. This is real. This is real data. This can't be faked. It took 9 days to pass this trade. These trades. This first level of the trading account, which is a student level. And I did 23 trades. And I did 23 trades because I'm gonna show you why what happened. So we're jumping to the dashboard. You see here, target was hit of $800. Maximum loss limit was this. Maximum daily loss was this. So I went crazy here. So what happened was, a few of the days I didn't trade. So I didn't trade on the 14th. Or the 11th or the 10th of this month. I started trading this particular account on the 2nd, and I lost to $343, and that's because I was trading with one of my other strategies, and I was like, you know what, let me just jump over to swing trading, or when you're trading hourly. On the hour time frame, you're trading an intermediate trader. So you're trading for a short period of time. So you're basically kind of scalping still. Um, and I know this video, I know I sound like I'm rambling, but I want to be really detailed on what I'm doing. So, I hope you appreciate me being very detailed. I'm not one of those flashy guys. So I want this to be really precise and to the point because I want you guys to be successful at this. So, um, I lost $343. I didn't so the next day I didn't trade. The fourth I didn't trade because I'm like, yo, let me gather myself on, and there was no move in the market at that time on that day. So I just left it alone. You don't have to trade every day. I know you guys think you have to trade every day. You do not have to trade every day. If the market is not moving in your direction, leave it alone. Um, so this is when I started getting into profit. I gained back $37. I got back 135 the next day, getting the account back. Then you can tell I took a loss of 288 on the 7th, but then I got back the next day on the 8th. I made $349. Now this is when I made an alteration to the signals indicator that I'm using, right? To the trend point. I made an altercation. I'm not an altercation. I made a change to it, right? So what I did is I lowered the point of entry, and I'll show you what I mean. So on the 12th, I hit 251. Now the 349 put me back where I needed to be, back in the $10,000 range, because that's what I started off with the account. Then I didn't trade on the 10th or the 11th because that's the weekend. And then on the 12th, I hit 250 during the day. And then at night on the 13th, I hit $670, which passed my challenge for me. My biggest win was 554 54. So this day I entered a trade and closed the trade at 553, and then I entered and closed it and passed the challenge. So that was the first day. That's the first phase of the challenge. That took me 9 days. Win rate, average loss was 65. Win rate was pretty low, 47, and that's because I hadn't made the change that I made to the indicator that I'm going to show you. But overall, I passed this challenge in 9 days. Now, they gave me my new account on the second phase of the account on a Wednesday, and I passed it. As you can see here, I did 7 trades, making, building the account up. So what I did was I enter trades, I take profit, and then I up the lot size. So I'm playing with the money that I made. So once I make like $100 or $200, now I'm up in the lot size because I have more cushion to lose. So it took me 3 days to pass this challenge. got the challenge on Wednesday and passed it on Friday in the afternoon. So jumping to the dashboard. Profit target was 500. Daily, daily loss limit, whatever. I took. I didn't take any trades on the 17th, which was yesterday. But as you can tell, I took a trade on the 14th, won $205. That was in the daytime. And then opened the trade at night on the 15th and lost $73.90. And then on the 16th, I hit 381, 381.27, which got me to the threshold to passing the challenge, because the overall amount that I had to hit for the pass the challenge was $500. So and my win rate here was $71. Now this is the second phase of the challenge. Win rate was 71.43. So now that I'm done rambling about that, let me show you what I'm doing, right? So I have I have I have the trend point here. I have the support and resistance. So what I'm doing is, like I said, like I'm doing with synthetics, I look at the resistance or support of the market, right? This market has been in the uptrend on the daily. This is a 200 moving average, and this is a 26. The 26 is above the 200 moving average here. So I know that the market is moving up and is going in the uptrend, and you following the slope of the line. We have a support here. So what I do is once I get my support, on my hour or my daily, I know which direction I'm going. So the daily is pushing up. So what I do is drop down to my hourly, and as soon as I get an entry, a resistance, or I'm sorry, a resistance or support on the hourly, and then that trend point hits, boom, that's when I enter. So I got if I entered, I could have entered here and held it and took profit here, or I could have waited until the 26 was above the 200 and entered here and took. This is a whole day. Look, these are candles from a whole day, right? So this would have been, this is why you're trading on the hour time frame, because you're getting longer, you're getting more pips. So you get from this arrow to this arrow would have been 60 pips. Then you could have got out. Then the next day came, right? And you got a trend point arrow here. And this would have gotten you 67 or 64. Yes, 65 pips. You could have got out, right? There, boom. Now look how consistent this is, right? Could have got out here. Now you're only taking buys. You're not taking any sells. You're not taking any buys. So boom, you could have traded from here to this point and had 95 pips, or you could have traded from this to this point and had 101 pips. But you see how consistent this is, right? But to take the stress off yourself, this was the previous high, right? This was the previous resistance right here. This 104 512, right? This is the previous resistance. What I did was, instead of, I took entries. Some days I took, the buy and held it for the day and got out. Take the buy, held it for the day and got out. But you could have entered here, right? From this point to this point, and this would have been 362 pips, right? 362 pips, because it had, what goes up must come down and what goes down must come up, right? So you're looking at the previous resistance, right? This is the previous resistance. So you could have entered here on the previous support and just held your trade until you hit this previous resistance and made, 350 some pips, which if you entered the market at $10, that would have been about $3,000. Let's just keep it real. Yeah, that'd been $3,000, if you entered the market at $10. But let's look here, right? So this was the previous resistance here, right? So we had a previous resistance here. You could have held and got out there, or you could have did been safe, played it safe, and only entered when the trend point arrows created themselves. So you could have entered here, could have entered at this point, got out there at the next arrow, then entered at this point, got out at the next arrow. The market was choppy here. So you would have waited and seen what happened here. The market was choppy. It would have did a pullback here, but it still went up. So you could have entered a trade here and probably lost a trade here. So this would probably been your first loss in this area. But then you could have entered a trade here and got out here. You could have entered a trade here and got out here. There was a pullback here on this day. You wouldn't have entered into any trades here. So this would have been a non-trading day. Then you could have entered here, right? Once this buy arrow hit, or yeah, this would have been a non-trade. So this right here would have been most of the day on this day. You would have waited until this buy arrow happened, and then you could have entered and got out here, right? Or you could have overall, which is that's scalping the market, where when you're entering trades and getting out at certain points, that's scalping the market. But you could have swing traded from this point to this point, from here to here, and did about 350 pips. So you could have rolled that. The thing down here is the sniper entry. So this lets you know the volume of the market, how strong the market is moving. So as you can see, this is completely blue. When it's blue, the market is in a strong uptrend. But then you see here in this area, the market did a pullback in this area, right in this area. So this day, this time right here would have been a time for you not to trade. Then the market went bullish again, and you would have traded. So you got these indicators letting you know the strength of the market. And I mean, this happens consistently. Like you could go back here and just look at it. Like look how this moves. You could like you get here, could have held and traded and hit the profit here at this point. It would have been a pullback, and the market went back down this way. Then you would have waited and hit it, got into a trade here and took profit at this previous resistance. This is the safest way to trade. Trading from support to resistance, following the trend. So you could also do adverse trading with this, but I like to just follow the trend. It's safer that way. So I would have just waited, or I'd have found a different pair to do this with. So I mean, there's the multiple pairs you could wait and follow and find these entries on. This is the Euro USD, I believe, was the one that actually uh I think no, it was today. I closed in profit with all the Jappy in the daytime. But each one of these time frames are showing you what it needs to do. As you can see here, we jumped on the daily on all USD. All USD on the daily time frame, as you can tell, is on the uptrend because the market is on support. You got a strong buy arrow down here on the sniper indicator. So you would have been looking for buys all here. So what's going to happen here is if the market keeps moving the way it needs to move, this should break resistance, right? So this should break this resistance. Once this arrow, or once these candles break past this resistance, then I'll be looking to take a buy. So you can wait until two things. You can wait until it does a full pullback and hits support, or you can wait until the candles break resistance. So that would be kind of break a breakout trade where you would break where the market would break past the previous or back past the resistance here, and you would keep entering. But I wouldn't take any sales in this market at all because the daily time frame right now is on support. So there it makes no sense to trade against the daily time frame. So right now daily on AUD USD is in the uptrend. So we drop down to the hour, and we would only be looking for to take buys on the hour time frame. So with that said, that is the strategy. I'm going to show you the setup, the indicators and how they're set up. These indicators will be in the link in my description. If you hear if you hear a noise in the background, it's my dog lapping water. She decides to do random stuff while I'm recording. So right now she's drinking water. She hasn't been drinking water. She's like a child. So she decides that she wants to just start doing things while I'm recording. So if you hear lapping in the background, I apologize. Um, but I'm gonna show you guys how I set up the chart. So um first thing you're gonna do is load up a 26 moving average. This 26 moving average is actually going to be it's going to be 26 smooth. Then you're going to load up, and that's free right here. As you can see, you loading it up from the navigation bar. The moving average is in the trend folder here on the navigator. So if you're looking for it, it's in the trend folder. Um, then you're gonna load up a 200 moving average, right? That 200 moving average, I apologize. So 200 moving average is exponential, and then I apologize. The 26 is exponential too. Uh, then the second thing you're gonna load up is the trend point, the Sage trend point arrow. You're gonna load up the Sage trend point arrow, which are these arrows, the buy arrows that send you the signal that make the noise letting you know that it's time to get in and out of the market. So these will sound off and let you know when it's time to get in and out of the market. This indicator, I used to run it at 27, so I'm going to show you why I changed it back to the to default 9. So 27, right? So if I hit 27, you have less arrows, right? So you have less arrows. So as you can tell, you're getting 1 arrow, 2 arrows, 3 arrows, 4 arrows, 5 arrows, 6 arrows. So you could, if you one of those people that can afford to hold trades for long periods of time, then cool. But the best setting for this particular indicator, for the trend point indicator, is going to be the default setting of 391 true and 2 and then false. So the original settings, keep it at that, because you're trading on the higher time frames. So when you're getting your buy arrows, you're getting hours worth of candles going. So you don't really need to have like this large gap in between your arrows. You get a buy arrow, you can take 4 or 5 candles, get out. 4 or 5 candles on the hour time frame is like about 20, 30 pips. 20, 30 pips a day will change your life. So the best setting for that will be the default setting. So when you load it up, default settings are going to be 391 true. This true here is what gives you the notifications when to buy or sell. Leave 2 false, and then you're gonna load up the support and resistance. So you can see support resistance level ultimate trader. This is going to stay on the default settings also. And you only enter the market when both of these indicators and the sniper indicator are doing what they're supposed to do. So sniper indicator is showing you in blue that the market is in a solid uptrend. We're only taking trades on the hour time frame based off the daily being on support. So as soon as we get a support on the hour, we wait until we get a trend point. The trend point will pop up on the screen, so you get a notification, and then you enter your trade. And you could have entered here to this point to the end of the day. So you could have entered here to the end of the day and made 81 or 80, about 81 pips. Boom, you're out of the market. Then the next day rolls around. You could have got back in and held it into this point and got out, and that'd have been 70 pips. Then the next day, you're waiting for the next entry. You get a buy entry. You get faked out here, but this arrow would have hit. Then you would have got a sell arrow. You would have got out here. This would have been 11 pips. You still would have made some money, but it wouldn't have been much. Then you wait. If you get crossover into the next day, boom, buy. It goes into the next day, 57 pips. Then you get a sell arrow. You get a buy arrow here, goes into the next day, 80 something pips. So you see the difference here. Like you're trading from within this daily period of time. So as soon as you get this buy within that in the day, it's going to do, if you look, it's going to do that move all the rest of the day until the market closes, right? Until the next day, which the next day for Forex market is 4:30. So in Central Time. So as soon as 4:30 hits, this is 4:30. This is when the market closes. Um, and then once you get into this, it's the next day. You would have held it, boom, out of the market. The next day would have happened, held it to the next day. So I don't want to keep repeating myself, but yeah, this is the strategy. And this strategy has helped me build my synthetic indice account because I'm trading on higher time frames based off of sniper entries that I can hold for, on the hour time frame for hours instead of trying to get in on the 15-minute time frame and watching the market go up, down, up, down, up, down. And then if you over leverage, it'll blow the account. So as long as you're entering on the hour time frame is the best time frame to trade on if you're going to be trying to make money consistently. Once you get into the millions of dollars or $100,000 range, you can jump up to the 4 hour. But this strategy works perfectly on the hour time frame. I would not use this on anything but the hour time frame. Don't use it on 30. Don't use it on a 15. Don't use it on the 4 hour. Don't lose it on the 1 minute. Just use it on the daily chart and the hourly chart, and you will be successful at this. And then pick, whatever pairs that you want to stay consistent with. What I realized is trading this strategy, trading Euro Jappy, all Jappy, and Euro USD and GBP USD, it works perfectly on those pairs. So those are the pairs that I trade this strategy with. I know this video was a bit lengthy, but I wanted to be detailed on what I'm telling you, so that way you guys can get in and out of the market and be successful. If you like this content, please like, comment, and subscribe. I'm trying to build this channel up. I'll be putting more and more content on here. I'll be doing day in the life. I'll be putting perspectives on here, like so my perspective on the world or just trading period. I'm going to be going live on TikTok, and I'll be trying to go live on here on YouTube. But with that said, guys, it's your boy Sage Jones, a smart investor. Each one of these indicators will be downloadable from a mega upload link in the comment in the description of the video. So you can go there, download these indicators. The broker that I'm using is OX Securities for this, and I'm trading OX Security. I'm using OX Security demo account. with these indicators to enter trades on Trade Locker with funding pips, because funding pip uses Trade Locker. I will be doing a video on how Trade Locker works and how I'm entering trades on Trade Locker, but this video is already long and I don't want to keep stretching it out for you. So with that said, also, so the link to this will be there. I also there's another broker I use, which is called LearnX. LearnX has PAM services. If you don't want to learn how to trade, or you want your money to work for you passively, you can join the PAM that I'm a part of also. It's just your choice. But message me if you're interested in that. And with that said, it's your boy Sage Jones, a smart investor. Peace.